Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, July 19th, 2019 DecisionPoint show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to our show. And for our regulars, welcome back. All right, Dad, ready to do another weekly show here?
Yes, I am.
Yeah, it was an interesting end to the market today. We were kind of chatting about that before showtime.
And tomorrow being the 50th anniversary of the moon.
That's right. And we did share the story. I suppose we could share it right now too, that I was only 3.5 at the time, sitting in my dad's lap. And I remember it really, really well. I can remember seeing it on the TV, even though I was 3.5, because my dad was like, Erin, this is really, really important. You need to remember this. And I did.
Yep. And I was wondering if could tell that story because you just gave up your age.
All right, then let's get it started here. We're going to look at the broad market indexes and the relative strength. We're going to look at the weekly charts of the scoreboard indexes. I'll be covering our DP indicators. And then I'm going to highlight our DP new highs, new lows chart list in our market indicators chart pack. Big Four, dollar, gold, oil, and bonds. My dad will be covering that. And as a bonus, it is going to be Carl's grab bag. So I know he has some interesting charts to show us there as well. So let's go ahead and we'll get right on into the charts. Actually, no, I want to go back. I want to show you the scoreboard. The DecisionPoint scoreboards right now, we're still looking at those long-term sell signals on the PMO. These come from our monthly chart. So the monthly PMOs are still below their signal lines, and that's what we're waiting to change. These signals really gave me a lot of pause, and I'm watching them. We're still waiting on them they've turned up at this point, those PMOs, but we're still not quite there for buy signals. As far as the scoreboard goes, only sell signal here is on the long-term trend model for energy. That long-term trend model means that the 50-day EMA, we're looking at the 50-day, 200-day EMA crossover. So if the 50-day is below the 200-day, that's how you end up with a sell signal. On all of these they're in a bull market configuration on a buy with their 50-day EMA above their 200-day EMA. All right, now we're going to go look at some charts. I'm going to start off with the relative chart for the major indexes. And the thing I noticed was clearly the industrials have been outperforming the S&P 500 now for quite some time in a pretty solid way, I would have to say. When you're looking at the other large cap indexes, they're starting to slow their relative performance. They're really moving along with the S&P 500. That's what that means when it's going sideways. And the ones I keep watching and waiting for are the S&P 400 and S&P 600 to break out from those relative lows, and we're just not seeing it. I mean, the good news is they're moving sideways, but I think that's the only good thing you can say about that chart. Broad market indexes, let's just look at the price charts for all of these indexes. And the thing I'm pointing out is the previous all-time highs. That's where I have marked the support resistance line that we use. And what I want you to notice is the margin between those all-time highs and in some of these indexes, how large that margin is between those all-time highs. S&P 400, it's lower, but look at the S&P 600 IJR. I mean, that is just, it's a long, it's a long way to travel to get back to all-time highs, and I just don't see that for quite some time. The Dow, we were just talking about how it's outperforming the S&P right now. It's pretty obvious when you see that price action there. Nasdaq 100 is stalled out, basically. We'll look at the daily chart a little more closely in a moment. Looking at the global ETFs right now, again, what I want you to notice is those all-time highs and how far away price is right now from those all-time highs. Germany very much hurting here as far as that. We've got the Canadian markets. I know as far as the price chart of the actual indexes, the Canadian markets have reached above those all-time highs, but at this point, when we look at the ETF version, it hasn't quite gotten there. France, still some pretty large margin there. UK, Japan, the Japanese ETF, wow, that's quite a margin there. And looking at India, we were seeing some improvement there, but now it didn't even go up to test that declining tops trend line. And then, of course, we're seeing a little bit of improvement on the China ETF, but we're still looking at a very long distance before it can even challenge those all-time highs. Looking at the Dow, let's just go through these real quickly. What I'm seeing on most of these charts now in the shorter term are rising wedges, and these are bearish patterns, and the expectation is a breakdown. I was looking at our ultra short term indicators. I'm going to show you that in a minute. And I was looking for a bit of a rally here. It just hasn't really happened at this point. And now we're seeing the PMO turning over, and these rising wedges are not, they're bearish. You don't want to see that. Dow weekly chart, you can see we broke out above those all-time highs last week, and we've pulled back from that. We've fallen 0.65% on the Dow. PMO buy signal still intact, not seeing any deceleration just yet on the weekly PMO. Nasdaq 100, this is the one that I've been watching. It's stalling out now. We're seeing it round off. And with this rising wedge, the Nasdaq 100 is already executing it. And, the back of the napkin textbook is that you take the back of the pattern here, and that's what you would expect to get your minimum downside target. That's like 250 points. So, we're looking at a decline that I would say would test these, that top back here in the lows, that gap support right there.
Erin?
Yes.
Note also the PMO, there's a negative divergence between the May top and the current top.
Absolutely.
And also on the OBV, we have the same thing. I guess maybe it's.
I think it's still just.
But but basically it's all that price movement wasn't supported by this appropriate volume.
Right. Certainly not healthy. Let's go ahead and look at the weekly chart here for the NASDAQ. And as I said, the PMOs are still rising. As far as the NASDAQ 100, though, we are actually starting to see just a little bit of deceleration. And you can see we pulled back below the previous top from 2019, those previous all-time highs. So down 1.36% on the week for the NASDAQ 100. That's, those are your tech stocks. When the market's healthy, they tend to be doing well. When they start to stall out like that, it's certainly a warning and something to think about. Looking at the S&P 100, again, another wedge starting to execute a PMO sell signal on tap. The weekly chart, we're looking at the breakouts, from those all-time highs. But we had a week of a 1.25% drop after we made those all-time highs. We actually opened the week on those all-time highs and have basically faltered the whole time. And we're getting that deceleration again on the weekly charts. But let's get to the S&P. Now, when I was annotating this, honestly, it came out to mostly a rising trend channel. I just didn't get a wedge to fit here. But I think that the PMO on the S&P 500 is far more negative than what we see on the others, because we're just about ready to get that PMO sell signal. I suspect we'll get it before those other indexes. Note also, the OBV tops in the shorter term have been in decline, and that is confirming this decline that we've gotten right here. But I would look at today's movement here on that OBV. We're getting a lower low, it appears. It's very hard to tell in the thumbnail, but not a good sight here. See those declining tops on the OBV pretty much confirming that decline. And on the weekly chart for the S&P 500, it is showing some deceleration. So just for memory's sake here, the Dow was not showing any deceleration on the weekly chart, PMO, but on the other indexes, we are seeing that deterioration. All right, let's look at our indicators, and I'll have a short moment to pop through our new highs, new lows charts. Right now, what I've been pointing out is we've hit that the center of the Bollinger Band on the VIX, and the last two times that was a place we bounced up and had a rising trend. Now we have done that. We did that yesterday. My sense had been we would start to see a move to the upside. I suppose you could say we did. Somewhat, but certainly not today. And now I'm starting to think that we might have to wait and see that VIX travel down to the bottom of the Bollinger Band before we can start looking for a decent rally out of this, at least in the very short term. The Swinland trading oscillators, I'm not liking them. We've got moves below the zero line. I really don't like when I look at the volume version, the STOV, because we have that low here, and now we're making lower lows than that. When I have these green blocks, that's to tell you that you want that oscillation above the zero line. As soon as we start to lose that, that's usually when you're going to go into a decline. So I'm not happy to see that. And with the volume one moving lower, if you don't have price follows volume. If volume is if we're getting volume indicators that are falling like this, that's certainly not bullish for the market. Intermediate term indicators, the ITVM, ITVM, they have made negative crossovers, and they do not look interested in deceleration right now. So in the intermediate term, it is time maybe to start watching more closely, maybe tightening stops, getting a little more cautious, at least with your intermediate term investments. All right, and real quick, let's go ahead and look at our new highs, new lows chart list. And we have new highs, new lows calculated for all of the indexes here. I just wanted to run through these charts very quickly. And of course, it's easy to do so. That's the beauty of these chart packs. Here's your new highs, new lows for the NYSE. But I think the interesting one, I'm going to skip over to the S&P 500. We'll go back to the Nasdaq. The S&P 500, we do have a 10-day moving average of the high-low differential. And when you look at that, typically when it tops out, and it doesn't even have to be an overbought territory, when it tops out, that's typically when you start looking for a decline. And when it bottoms, that's when you start looking for the rise. Right now, it has topped. The top is lower than the previous top. Look at the difference in our new highs. They continue to move lower, but look at what was going on with price, rising and rising. We're just, the participation isn't there right now, and it's something that I would be a little bit concerned about when I look at the new highs, new lows. Let's peek at it for the Nasdaq. And there you go. You can see in the thumbnail very clearly the increase in the new lows and the decrease overall in the new highs. We go to the OEX, and again, you're going to see this on all of these charts, these declines on the lows. Now, I will say that with the OEX, you're looking at only 100 stocks, and the NASDAQ, you're looking at only 100 stocks. So you might get a little bit more, jumpy movement here. But right now, we still are seeing new highs and not any new lows on the NASDAQ 100 and the OEX, but we are certainly seeing a lower, we're moving lower, we're trending lower. The 400 and 600, which we have been talking about not doing well, we're getting a similar situation here with a decline in those new highs, and that came back here, but it's also occurring now, which means to me that it is now confirming that decline that we are experiencing. And then here's your S&P 600. And again, these are already created for you in the DecisionPoint chart packs. So if you're an extra member or above, I highly recommend you check it out. DP Market Indicators chart pack. And it is free. So we do see a decline again in those new highs and an increase in the new lows on the S&P 600. We're already having issues with it not participating in the rally that we had before. This is just more bad news, I would say, for the market. And then the Dow Jones, again, you're going to have, it's a little bit jumpy because there's only 30 stocks. And right now we are seeing that decline in the new highs. We don't have new lows right now, but like I said, there's only 30 stocks in it. So 9, we had at one point, 9, we had 7, and now we're down to 2 stocks in the Dow 30 that have made new highs. So I'm going to pass it over to you, Dad, for the big 4. And I know you've got some interesting grab bag charts.
Okay. Starting with the UUP. I wanted to make one more comment about the moonshot, just a short one. But, we did that back then with guts and determination and slide rules. They didn't have handheld calculators in those days.
I know, that's just crazy to me. And when I watch those shows and you see those old control panels, and yes, guys out there with their compasses and slide rules, it's insane. It is. I can't believe we did it.
Okay, the dollar has been, UUP has been moving in a consolidation, ragged as it can be, a little hard to figure out, but it's basically still in the middle of that since back this far, really. Let's look at the weekly. Higher there. That's monthly. Okay, the weekly. So you see we have long-term resistance going back to 2014, and actually, but anyway, long-term, I think it's going to be stopped again at that line, or around that line. Gold did really well yesterday, but then today it's back down into that flag formation. So I thought we had it going one more time. Gold takes us out. The PMO is turned down, and I still think we've got this flag and still might come out of that. The weekly chart, major resistance, now support line. So I'm optimistic that it will stay above that line while it's working itself out. Notice that the correlation, there is no correlation right now between gold and the dollar. Crude oil fell out of bed this week. It did find some support right at the bottom of this gap over here. And but we've really got a double top here, a little lopsided, but it's down, well, it's back above that line. Anyway, the downside projection would be down around here, minimum. The PMO to the cross, no, it's still above the signal line. The weekly chart, still in the middle of the trading range. USO and WTIC. PMO is just kind of indecisive right now. I think it did. No, it's still above the signal line right there. It's choppy. T bonds had a it came off that top, but we found support on the horizontal line there, and also this rising tops line. The PMO still falling, and let's look at the month of the weekly to get. You see, there's overhead resistance line long term there. Today, the weekly PMO turned back up. So, oh yeah, and at the bottom of the chart, we have the 20-year T-bond yield. So it could go lower, probably will. And so that would mean bonds will be going higher. I'm going to jump to the new charts first. Where did I put that chart? Oh, there we go. Tom McClellan had an interesting article, QQQ volume, in the Top Advisors Corner on StockCharts.com. Basically, he's done a 10-day moving average, simple moving average of the ETF volume. The VETF volume and the index volume are two different animals. The ETF basically tracking traders, and the lower that the EMA gets, the more complacent people are, and more likely that you're looking at a top. Now, I've stolen the idea and put it up here for the for SPY, and we have a similar situation as to what he pointed out for QQQ. Notice that the moving average is below the May, what it was at the May top. So another bad sign of what could be happening to us. Another new chart. I have started, I keep a set of the 11 sectors, spiders, and I've been, I decided to add the bullish percent index to each sector, because there is a BPI for each of the 11 sectors. What we're looking at here is really, it's slightly lower, which I don't think is really significant. I mean, it is a divergence, but it's up at, it's what, near 90. So as opposed to 92 here. That means most of your stocks are participating in that rally. But the problem is, if we apply my theory, that things get better and better till they're as good as they're going to get, and then they get worse and worse until they're as bad as they're going to get. Now, there's no limit on that, but it keeps cycling that way. But you notice that when it gets up to these high levels, that there's a pullback and a correction that will take place. So right now we're back up there, and I think we're pulling back again. We also have negative divergences on the OBV and PMO. So it's not looking so great. And this reversal today, yuck.
Yeah.
Okay, let me get back to normal. I had a reader complain to me that there wasn't really a rate inversion. There is on a lot of the longer term stuff. The yield on from the 20, the 10 down to the 1 year are lower yield than the 1 and 3 month T-bills. But notice it really got close this week. The 3 month is down where what did I say that was? The 10 year. It's getting close to being lower than the 10 year, which would be a normal situation. But still, all these yields are lower than the 30 and the 20. I really went crazy on this chart this week.
Wow.
Going back to 62. And I even had to make the S&P chart use a log scale. But basically, it's just showing we have the ability to look at the peaks, and when it comes off the peak, what happens to the market. Here, it didn't seem to be a problem because the market went up there from there. But here, big crash. Here, big crash. And I think we're going to have a similar reaction to the last two as we're coming off these interest rate peaks. I wanted to point out that the VIX hit the top band in 3 different cases here, and in this last one, we're getting it did a pullback for each of those, not a big one. It could turn out to be a big one. You never know, but you should be looking for. It's probably not the best time to go on. Probably could wait a few days and might get a better opportunity if you're going long when it hits the top band. But I'm thinking that, I think it's like you said, it's going to go to the bottom band and probably, I would say, push it down. Okay, we have the percent of IT trend model buy signals in the S&P 500. It's broken trend. It's still not. It's not headed down in a big way, but the broken trend, I'd say that's a warning signal. The Golden Cross percent index, that's 50 EMA above the 200 EMA. It's still looking good, and it hasn't turned down yet.
All righty, I got to cut you. We're out of time, believe it or not. Right. I know. Thank you for coming and seeing us here today. We do air Fridays at 4:30 p.m. Eastern. I hope you all have a great weekend. We hope to see you back here next Friday, and I know Carl will cover more on these charts then. Happy trading.